Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York on Monday, the 25th day of August 2014, and this is the daily report for gold and silver. Again, except for palladium, we do have the precious metals lower across the board. First to gold. Gold currently trading down about $5 on the day, $12.75.90. Current print on the screen, $73.80 on the low, $81.80 on the high. Silver also trading lower, off about 5 cents on the day. Current screen print $19.36. It's had a low of 25, a high of 59. We'll touch on silver at the end of the show. Traders, we do have the equities markets trading higher. Actually, the Dow Jones Industrial Average breaking over 17,000, up 75 points at 17,076. Started just below 17,000, ends above it. That obviously has put pressure on the precious metals markets, with gold trading under pressure, as I said, off about $5 on the day. Now, the key to me right now is the fact that it has broken below the 61% retracement level. That's right here at 1280. And really key support that we really wanted to see the market be able to hold was at least a 76% retracement level. It's also a 50% retracement level, so you do get a harmonics right in this area. We broke clearly below that as the market has drifted lower, currently trading 76.25. And as I said, that puts it below this mark at 1280. The next real level of support on a technical basis, traders, it doesn't really fall in till about 1265. And as I said throughout the week, we could still see the market track to this, find support and move up. However, the fact is that we have drifted below this 1280. To me, that is a pretty substantial point and does not bode very well for the gold bulls or looking for the market to track higher. Now, yet another way to look at this market technically, of course, I've gone ahead and I've pulled up a daily chart. On this daily chart, I want to kind of look at a couple of different areas. The first area is this one zone right at around 1280. We're trading now 1277. And the one thing that we see is this one bottom here, very, very supportive as the market comes down and bounces back up. We're still in that area right now. Of course, we're below this last support level here. If we look at this particular rise here, we don't get any really strong technical information. And then lastly is if we just draw, as I did it in magenta, but if we do it in black, just a basic line across this entire trading area, what we do see is that as the market hit this high, and this was the $200 rally beginning of last year, end of last year, beginning of this year, market comes up and then comes down to this dramatic low, because if you recall, this dramatic low puts us below the 61%, that's the 1261 area right in here. But the first low that we got, which fell just below the 50%, above the 61%, you can see a couple of areas where we had lows that went into this particular price point or support level, but recouped by the close of the day. This, of course, being a daily chart. You don't have any real bodies, meaning the range between the open and the close, trading anywhere in this area here. Market breaks below, really nothing significant. It breaks right through there, as you can see, comes down, comes back up again. Really what we did see is as the market broke above that, you saw this tremendous gain. When we look at this market this particular day here and then this particular day, these are double-digit days, of course, in which we saw dynamic spurts in the market. This occurs right as it breaks above that. And that's, on a technical basis, why I think that this area is so important. The other thing that we want to realize is we're not that far below it. In other words, we could easily see this area become supportive and then see the market move back up. However, if we see continued pressure in the market, again, 76% retracement, 1265, 61% retracement, 1261, I am absolutely labeling this area as an area of Fibonacci harmonics. Anytime, of course, we get those harmonics in the market, there's absolutely no doubt it lends strength to that particular price point on a technical basis, not on a fundamental basis, but on a technical basis. So that's a really, really important point should the market continue to drift. The other technical factor that's really become prevalent on our radar is the fact that if we take a look at these series of lows right here and right here from these recent declines, we then draw a upper level resistance line. Let's put that in a little better. We see that there's absolutely no doubt that we are trading within this range, and the range again has been compressing. We are getting a series of lows that are higher. We are getting a series of highs that are lower. And as long as we continue to do that, you get a compression of range. It creates that compression triangle. Some call it a pennant formation, a flag formation. The key, though, is that as we approach that apex, the fact that this range has really been narrowing, according to the theory of a compression triangle, means that the energy is building within this market. And once it reaches either A, the apex, or B, breaks above or below resistance and support, you get a substantial release of energy. With that release of energy, you get this market moving in a dramatic way, The other thing that we can look at, though, is in terms of an Elliott wave pattern. This is a particular corrective type. All of this falls within a triangle that Elliott wave theorists will say have a series of 5 legs. So we have 1, we have 2, we have 3, touchdown on the bottom, that would make 4. And then the 5th is basically called a thrust. If it breaks above this like this, that would complete the compression triangle. And once it crossed over this, you would have a move back into a impulse area. And that would be a series of 5 legs, as Elliott wave calls it. So that's the other thing that we need to be looking at. I think most importantly, what we have to discern is if the market continues under pressure, how will it react as it gets to the support area? Because if you get a break from the support area here in which the market breaks below, it's going to release a tremendous amount of energy either way, whether it breaks above it or below it. And at that point, you should get a pretty sizable move. As I said, traders will just have to see where this market wants to go, but these are the parameters we need to look at. And then lastly, to silver. I find it interesting on an industrial metal that's also a precious metal, meaning silver, on a day in which the market makes new highs, the equities markets, that we're not getting some sort of a sympathy move, as we are seeing in palladium. Of course, with palladium, there are supply issues, but demand for silver, if global economies are moving, if the U.S. economy is moving, then silver should be in higher demand than if you have slowing economies. We're certainly not seeing any kind of spill or carryover from the equities into silver. Silver currently trading just at the 76% retracement level in the same way that gold is, currently trading just under it at 34.35, of course being a 76% retracement. Depending on how the market reacts here, we will be able to really ascertain. This would be a logical place to look for a bottom, but without any kind of signs either through candlesticks, Japanese average charts, or the other indicators, Western indicators that we use. We're simply on a holding pattern and waiting to see what develops both in gold and in silver. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.